Good morning, one and all, and welcome to another one of my videos. So I have four pairs on watch today. Those are Euro CAD, Euro Dollar, Pound Aussie, and Pound Kiwi. So I'm going to break them down for you now and give you my thought process as it comes to me and as it came to me last night when I was doing these forecasts. I've just adjusted my entries on Euro CAD and Euro Dollar, because there may be another possible entry which I may be able to take. And I'm just looking at how price action has evolved during the Asian session while I've been asleep. And I just amended my forecasts ever so slightly to reflect what I'm seeing versus what I was seeing last night. But without further ado, let's break these pairs down for you now. So EuroCAD is my favorite of the bunch. And why am I looking at this pair? I'm looking at this pair because with the sharp move down, sharp move up, which gives me an indication that there was a lot of liquidity that was placed in this area. If it moves down very quickly and then moves up very quickly, that is likely because there was a lot of orders being placed in this area, a lot of lots down here. And of course, we arc all the way back down, tap into that area again, break just below, and there's an exchange of liquidity once again. All the stop loss orders and all the limit orders are filled. We push to the upside by way of these impulse correction continuations, which is typically what we see. One of the things we also see between a range such as this, we often see flags, larger flags in the middle of the range. Okay, and if we just measure this, measure the impulse to the top of the correction there and stick that there. So impulse correction continuation. The continuation legs out of the correction tend to be of a similar length to the preceding impulse, and that would take us up to this area, which makes sense because we have what we call a near miss. So when price gets close to an area of liquidity such as this, particularly when it's a sharp hook point, sharp move up, sharp move down, we see these patterns repeat themselves time and time again. It makes sense for us to take out this high before potentially pushing to the downside or forming another correction to push higher. But at this stage, we don't need to worry about that. There's other things which stand out to me is that we have these bullish wicks. Okay, so when we have a bullish candle here with a green wick above it, these often get filled. We have another one here, okay, which fills the previous one. So the chances of this being filled are higher because it's a bullish wick. So that's another thing. What we also see in a lot of cases, so I'm just looking at this as an impulse correction continuation to push higher. What we often see is a near miss, what I call the FOMO channel. Okay, so we have a base here, we have a sharp move down, sharp move up. If I just drill down to the daily, it'll probably be clearer. Sharp move down, sharp move up. Price comes back down, it near misses, it gets close to here once again, moves up very correctively, and often these near misses get filled. Okay, so people try to buy this, but the orders that are still down here and the orders that are being placed here drag price back down, and you can see evidence of that here by way of this sharp pullback before price tries again. And then what do you know, we come back down to this area once again. So we've kind of reached if you look at the daily close yesterday, we've kind of reached this area by way of a full, almost full-bodied price action there. That's a good indication that a reversal or further continuation on the higher time frames may be about to take place. The other clue that we were likely to tap into this area is we have this, if just to touch on it, look at the previous weekly close. It's like a bearish high test. It's got a bearish body and a big wick below it, and often if we're going to push higher, these wicks get filled before the move to the upside can occur. So I wasn't fooled by this bearish candle there. And you can see if I just drill down, if I drill down to the 4-hour chart, so we've got full bodied bearish price action on the daily chart. And then we have a structure. We have what we call an ending structure. So when we get near to an area of value, this is typically where we see these structures form. And partly why that is the second leg once again tends to be a bit of a FOMO channel. You can see momentum comes in, it correctively moves up once again. Many people that were waiting patiently for it to get down to this area would have abandoned their patience and thrown all the patience out the window. They start buying when they see this, because they believe that the move from this area is going without them. Of course, it hasn't even reached that area yet, so they start buying, and then price comes down. And so we've kind of tapped into this area now by way of full-bodied price action on all time frames. There's not really any wicks to be filled as such. I mean, you could argue there's a minute one there, but that's kind of been filled by this wick here as well. So price doesn't necessarily need to come back down, although typically speaking, as I've said in previous videos, when we have a liquidity point such as this, which is visible on the higher time frames, and this one is visible on the weekly as well, it is usually the case that we break the low before pushing to the upside, as these brokers and trading news platforms put out their messages saying EuroCAD at, whatever this is, um, you know, 3-year low or whatever it is. And we tend to see people start selling the lows because they think that it's just going to keep going. Okay. So the brokers and so forth do that to encourage FOMO. So typically speaking, when a liquidity point such as this is visible on the higher time frames, we typically break the low before pushing back in and before that move to the upside can occur. So that's, although not always, okay. Nothing, as I've said previously, nothing happens none of the time and nothing happens all of the time in trading. You have to use some discernment. So there's not necessarily at this moment in time a reason necessarily for price to come back down. However, we do have to be mindful of the fact, I'm just going to put this forecast away for a second. We do have to be mindful, because we've moved down with quite a bit of momentum. You can see here we've moved down with quite a momentum. This could be something like this to push down before potentially pushing back up, or whatever price wants to do thereafter. So this could be a bear flag, an impulse down, correction, continuation to push lower before anything else occurs. So I wouldn't be taking a little flag in here, for example. Okay, I wouldn't be taking a little looking for a little flag like that before getting long, because of that. Okay, and because of what I've just said, and all things considered, what I'll be looking for is a break below here, followed by a pushback up and a flag before I look to get long. That would be my preferred entry. Looking at how this is forming, we may push a bit lower because it looks like it may be building a bit of volume. And of course, if it builds volume, then the push down might be larger, which would mean that the pushback up and the flag would take longer. But we shall see. It's kind of in that area now where let's see what happens next, kind of thing. But because we don't necessarily need to come back down here, so this is my preferred entry. If we break below, okay, and it's of a similar sort of depth to this, if we break well and truly below, and by this point we probably would have touched this trend line for a third time, I'll be looking for a break back in, followed by a flag, and then I'll be looking to get long on the break of the flag or within it. Okay, with what we call a risk entry. The one on the break is the reduced risk entry, because the move has been more confirmed. It's a more confirmed structure. To negate the possibility of this becoming an impulse correction continuation to push lower, if we just simply impulse up, and by this point we would likely be above here as well, that kind of negates the possibility of this turning into a bull flag to push lower. Because if we impulse up and correct, then this flag's been completely negated by the correction that has happened. So if that happens, and I've color coded these in the kind of traffic light system. If that happens, once again, I'll be looking for price to, if we impulse up from where we are, I'll be looking for price to correct, and then I'll be looking to get long on the break of the flag or within it, and then I would be able to manage it up to this kind of trend line area, and these inflection points for something in the region of 2.5%, depending on how the flag forms, the size of it, etc. But as you can see, we may be pushing down to break these lows first. We shall see what happens. And one of the reasons that we don't necessarily need to break the lows is because if I just, I'm going to touch on this once I break down euro dollar, because it will make more sense, I think. So I have an alert set there, another one there, and we shall see what happens with euro CAD. So that is what I'm going to be looking for on that pair. So euro dollar, similar sort of picture to some extent. We have an exchange of liquidity here. the last one that I can see on my chart. Okay, so we come all the way back down. We tap into that area where there was an exchange of liquidity, the last one that I can see on my chart, which would obviously, if it's the last one, be a good profit taking area for people who have their ray lines plotted as we do there. It breaks just below once again, takes out all the orders, all the limit orders, all the stop loss orders, and then we push to the upside. And once again, we have this impulse correction potential continuation to push higher. Now, admittedly, I've just adjusted this based on my what I was looking for last week and the week before. We have to remember. Apologise if that was rather loud. I didn't realise the volume was quite as loud on my computer as it was. I'm just going to turn that down. We don't necessarily need to take out this low here. And the reason being, that was just an alert I had on another pair just to see what would happen next. We don't necessarily need to, because on the DXY, which is the inverse of the euro dollar, we are at a significant area of value which we may reverse from. Okay, and we've filled that bullish wick there, so we're looking for an impulse correction continuation on the DXY. We filled that wick there. We filled that bullish wick there above this bullish candle here. We've tapped into that area by way of full bodied price action yesterday, and we are in well and truly reversal territory. I saw this last night, and I thought that this bullish wick would likely get filled. So we had this bullish 4-hour candle with a bullish wick above it. I thought that would likely be filled, which it has. But we're in that reversal. Since we've filled all those wicks now, we're in the territory now where we could literally just drop out here, form continuation, and then go. Okay. So with that in mind, that means if I just drill back to euro dollar, that we don't necessarily need to come all the way down here. We tapped into that area there that I was talking about a second ago. And then we have that impulse correction potential continuation to push higher, take out this low, and most likely this one as well. And if we actually just measured that, let's take it from there, the top of the correction. That, by coincidence, would take us bang on to that high there. Okay, so those of you that have not seen my videos before, the reason we trade the patterns that we do is because there's mathematics behind it, and you couldn't make these things up, that when you actually measure them, they line up perfectly with other areas of liquidity, almost to the pip a lot of the time. So that's why we trade these patterns, because they repeat themselves with statistical and mathematical reliability. So we've tapped into that low there. Okay. Once again, we've done so by way of a 1, 2, 3. And so drill down, we have this kind of ending structure that I was talking about again. I'm just going to speed up ever so slightly, because these videos can only be 20 minutes long. And at the end of all this, we have this 1, 2, 3, giving me a clue that potentially this move has come to a completion as well. There we go. We have that bearish candle with a wick below it again. Price is coming down to fill that wick. And if I don't know what's happened here. Right, there we go. Let's just get the forecast on the chart. So what I'll be looking for, once again, right, we could push lower, because this could be another impulse correction continuation to push a little bit lower before we get the move to the upside. Okay. So with that being said, what I'll be looking for is, if price pushes down to this trend line, I'll be looking for a convincing impulse up followed by a flag, and then I'll be looking to get long either on the break of the flag or within it. But because the DXY is positioned where it is, as I touched on a moment ago, we don't necessarily need to come all the way down here. So if we just simply impulse up, which would once again negate the prospect of this being an impulse correction continuation to push lower, then I will once again, as I was with Euro CAD, be looking for that to get long on the break of this. If we just simply impulse up from here, and I'm just going to amend my alerts ever so slightly, and then I'm going to speed up because I am fast running out of time. Let's get rid of that one a second. So if we just impulse up. So I'm going to set another one there just to see if we can impulse up. And there we go. That is euro dollar. So that's what I'm going to be looking for. There's alerts going off all over the place. So we need to be on the ball here. Right. So pound Aussie. So pound Aussie, nice simple one. We have, what do we have? There we go. Right. So we have this. You can see this if you zoom in slightly, but we have this sharp hook point. Sharp move up, sharp move down. Price comes all the way back up. It wicks to that area. And we know now that many people would have had their ray lines plotted as such. We also have, once again, a near miss, which I've talked about, that these near misses often get filled when they come close to what is the base of a piece of structure like this. I've just cut through the wick that you can see just to the left of this. That is off. This is an area of importance because it was the base of a piece of structure. So it's not just a random low. It's actually a significant low because it's the base of a piece of structure, which price will likely gravitate back towards. Okay, so we have the near miss there, which will likely get filled. We break above, catch people the wrong side of the market, and then push back down. And then, so you can see the impulses and corrections that have followed afterwards. Impulse, correction, continuation. We have a series of those all the way down. So we're in a state of continuation, and then we have the intentional hook point there, which just so happens to be the back end of this. And what did I say? These bullish wicks before a move to the downside can occur often get filled, although not always. This one here didn't get filled. Okay, but we have a bullish wick there. If I just zoom out to the daily, we also have a bullish wick there that will likely get filled. So the higher the time frame, the more likely these bullish wicks are to be filled, and the more time frames there are bullish wicks on, the more likely they are to be filled as well. Okay, so we have a bullish wick on the 4 hour. Not so much of a wick there, but you can see that we are potentially gravitating back towards this area here where the orders are likely stacked. Now, one thing to touch on, when we have pushed down and we have a sharp move up like this here, in the majority of cases, price will do something like this if we have a structure forming as such, okay? But obviously that would not be ready by the end of the day. You only have to count the candles at the bottom to realize that would not be ready by the end of the day. But as I said previously, nothing happens all of the time and nothing happens none of the time. And sometimes price literally just pushes up here, taps into the area, and because there would be no structure to this move up to this area, in that instance, what I would be looking for is just a simple push back down followed by a flag, and then I would be looking to get short on the break. Short on the break of the flag or within it, and then I will be able to manage it down to these areas here. So that's what I will be looking for that reason. So that's what I'm going to be looking for pound Aussie. And then last up, it's going to be a similar story with pound Kiwi. So the sister pair of pound Aussie. Right, so if we just look at this one, we have this high there. I've just cut through the wick once again. You can do that. You can determine whether this is volatility or actually part of the price action by simply switching to the line chart. And if those wicks don't occur, then it is likely just volatility. So we tapped into that area. We come up, near miss it to some extent, come back up, tap into the high, catch people the wrong side of the market who buy into the news that this is just going to keep going. In that case, if we're cutting through this wick, we then therefore have a near miss down to here, which will likely get filled. And if I just drill down, because we are fast running out of time, we have the same thing, a hook point there. And so what I'll be looking for, we could just flag under here and go, but this is an intentional hook point, and I wouldn't necessarily be taking smaller flags down in this area. So what I'll be looking for is the same thing again. If I just unhide the forecast, simple thing again, just price to tap into that area, push back down and flag. And if we do that, then I'll be looking to get short on the break of the flag or within it. And that is all I am going to be looking for today. And you can see I'll be able to manage that down to the low of this structure if that was to occur by the end of the day. But that is it, folks. I've done my best to get through these pairs as quickly as possible. There are things about these pairs which I have overlooked because there's not enough time to actually tell you my entire thought process. But I hope you've taken some value from this, and I'll see you again soon. Thanks for watching.